All right, so tonight what we're gonna do is we're gonna do some chart markups. We're gonna go over like demonstrations on how to mark up your charts the right way. It's recorded, so y'all can go back and rewatch it. I will upload it on the website. Also, if y'all got any major questions or anything like that, just make sure y'all um, send me, or actually just put it in the chat or unmute your mic if you want to say something or whatnot throughout this call. So apparently, Funding Talent is not letting us trade commodities, which is gold, indices, which is like US 30, Nas 100, and also crypto like Ethereum and XRP. So I'm not going to focus on those pairs right now. I'm going to focus on regular Forex pairs like Euro, GBP, and what GBP JPY and GBP USD. Those are the pairs I'm going to more likely focus on. So currently, this was a signal that was sent out today. If you took this trade or if you're still holding, you should be in profit about 60 pips. TP2 is about to get smashed sometime probably about tonight. But I know TP1 was definitely smashed for like 44 pips. This was a great trade. We also caught gold today on the way up. We pretty much caught this second leg, like right here. We caught all this up to the top. We scaled about 65 pips. We caught it about like right up in here, so about 65 pips. Then news happened, and then price came all the way back down. And we predicted this just because of Forex Factory. Like I always tell y'all, these numbers don't lie. So if you pull up Forex Factory every morning, if you're trading a Euro pair or a USD pair or GBP pair, always look at the folders. Yellow folders is an indication that whatever these numbers indicate, price is not going to be affected if it's a yellow folder. If it's a red folder, price is going to be affected. So the reason why gold looked like this today, and the reason why the dollar also looked the same way, the same exact way, is because we basically go off the dollar. So I always tell y'all, if the DXY is buying, all pairs that has USD behind it are going to be going in the opposite direction, which is selling. So news came out at 8:15, which caused gold to buy up. So you always want to look at the previous and then look at the actual. Don't worry about the forecast. The forecast is just their prediction, but it's never accurate. They're never on point. So usually, like let's say if you're up at 8:15 and then news comes out at 8:15, if the previous number is higher than the actual number, then that means that the dollar is going to sell at 8:15. There's going to be some type of big sale happens, which is going to cause, gold to go up because the dollar is going down. It's always opposite, vice versa. Then if you look at 10 a.m., gold sold. Literally, we watched this whole move, and I had that call recorded as well. I would drop that call as well. The previous number was 60.1, which is the US dollar. So the actual came out at 64.1. So as soon as news came out at literally 10 o'clock, the DXY did this, and then gold sold down, literally. So the DXY was buying up because the 64% is higher than the previous. So that just automatically tells you that whatever is against that pair, you know what I'm saying, is going to be going down and the dollar is going to be going up. So always remember that. Do that first thing in the morning before you start any trades. Know what's going to happen on news. Always know that. So, okay, somebody asked, what does the orange folder mean? So orange folders is pretty much, it's kind of like a slight impact, but not as much. So orange folders, you don't really have to be skeptical about, but if it's red, make sure you look at the previous and then look at the actual before you start taking your trade. So instead of like trying to beat news, wait for news to come out and then take a trade. Like tomorrow we have GBP. So if we're in any GBP pairs around 7 a.m., we have to wait for these numbers to happen. So right now this says 89.5 billion. And then all these other numbers I don't really understand, but we can go off of this 85.9 billion. So if the actual comes out higher or less, then we'll pretty much know what's going to happen with GBP. But I usually go off of the USD because I trade mainly USD pairs. I usually do USD pairs because it's always just because it's a better, you know what I'm saying, better way to trade in my opinion. I like USD pairs, but I'm about to start trading GBP pairs as well. So let's get into it. All right, so the previous is bigger than the actual, it means sell. Exactly. So if the previous is bigger than the actual, so if the actual comes out less, then more likely the dollar is going to sell, which happened right here in the DXY, which was like early that morning. We had like this slight drop right here on this particular candle. And then news came out again at 10, and the actual was bigger than the previous, which made the dollar bounce up. So that's one way to look at it. All right, so whenever you're starting these charts or whatnot, you know what I'm saying, you always want to start on a 1 hour time frame. You don't need any other time frame. So I'm not working with the 4 hour no more. I used to, but I stopped just because I'm not a swing trader. I'm an intraday scalper. So that means like I can catch the same moves anybody else catching, literally on the 5 minute and the 1 hour, and catch the same amount of pips, but at a faster rate. You know what I'm saying? If you're swinging, you're trading for half of the day, or you know what I'm saying, 2 days or more. But for intraday, you're literally just holding trades throughout the day, then you're done. So it's like daily profits once you have these particular setups. So whenever you start on your charts, make sure that you always have your charts zoomed all the way out. You need to be able to see everything. So like I always tell y'all, what's done on the left side is always going to be done on the right. So first things first, whenever you start marking up these charts, you got to start out with these zones. These key zones are a representation for you to be able to understand what levels price are going to react at. So when price gets to a certain level, to a certain zone, there's going to be some type of market structure pattern form, whether it's a double bottom. And I'm gonna go over double bottoms. So double bottoms is an indicator to let you know that price is more than likely going to make a W. So this is one market structure pattern right here is a W. So price will look like this pretty much if it's going for a buy. So let's say price gets to a zone. Once price gets to a major zone, price is going to make this first leg, and then it's going to make a neckline. The neckline is always a resistance level. So a resistance level is pretty much where price is going to stop at. You could take a trade here, but it's going to be a short trade. But just understand your risk. So that means don't be trying to like hold this trade for a long period of time, because if this is a major 1 hour key zone, like a major support level, then 9 times out of 10, you know what I'm saying, price is going to like respect this level and not break below it. Now, if it's a weak support, price will more likely break below this particular area and sell all the way back down. So let me show y'all that as well. All right, so like let's say for instance, price, if this was a weak level, price would come down instead of respecting that level, and then price would come back and retest the level, and then come back down for a sell. So that's like 2 ways to look at it if it was a weak support. All right, so let's say when the double bottom is formed, you always want to take the trade on the second leg up, because the second leg is always going to be the major leg for you to catch a buy. And what price will do is price will break above the neckline, come back and retest the neckline, and then make a confirmation and make a new high. So it's like what price is doing is making a higher high, a higher low, and a higher high. So that means price has to go up, down, up, down, up, down, up, down. That's why you see these patterns of where price is going up, down, up, down, up, down. But every time price goes up, it makes double bottoms. So you see here, if you look closely at this little area right here, this area is a major double bottom. You can see the W form. Here, you can see a W form. Here, you can see a W form. Drop some ones in the chat if y'all see these W's. I need to make sure that y'all can be able to see these W's, because these W's are major moves for you to scale your account to the upside. And you should not take a trade, you know what I'm saying, if you're not seeing a market structure pattern. So if you're not seeing any structure, there's no reason for you to trade. So that's a W. Look at all those W's, literally. And then look over here. You got a W right here. You got a W here. You got a W here. You know what I'm saying? It's W's everywhere. W here. W here. Y'all see all these W's. You can literally see it's not going to be a perfect W, but in order for you to be able to catch this W, you have to understand that these are what we call equal lows or equal highs. So sometimes the W can look like this. It can go up, make the net line, come back down, and then go up. And it still respect that zone, you know? It'll still respect that zone. Hold on, y'all. It'll still respect this zone right here. And then as price respect that zone, come back down, retest that support, and then go up. That's another W. So sometimes you can have a slanted W. When I say slanted, price will come down. You can draw a trend line on it and it looks exactly like that. Or you can have a W that looks like it's in the uptrend. Either way, price is going to make that second leg to make a new high. So make sure you writing this down. If you got to draw a picture of it on your notepad to be able to understand what the W is going to do it, because you have to understand what a buy long position is. All right, so now let's look at something else. All right, so that's one market structure pattern. All right, so before I actually start marking these charts, I just want y'all to be able to notice this. All right, so let's say price comes back to another zone. So this is another market structure pattern for a confirmation for a buy. So you have pretty much inverted head and shoulders. So inverted head and shoulders kind of look like this. Usually what price do is it'll come up, make like a little, it's kind of like a mountain, and then price will go up again, and then price will come back down and retest here. So you supposed to take the trade. You should be looking to take the trade somewhere along these lines, like right up in here. So you should be trying to take the trade like right up in here. So what price is going to do is price is always going to make an inverted head and shoulders. The inverted head and shoulders is a confirmation to let you know that price is about to have a reversal pattern for a buy. So usually what price will do is it'll fake out, come down here, may grab another small equal level, and then it'll make a V shape. So once usually you have a V shape, there's always going to be a left shoulder and a right shoulder. So right shoulder will always happen like this, boom, and price will bounce up. So this is your buy entry. This is your buy entry right here. You'll always catch the buy entry on the right shoulder. So if you do not see a W or inverted head and shoulders, do not take the trade. There's no reason for you to take a trade. There's no setups for you. These are the major market patterns that elites and market makers look for you to be able to scale your account. So, and usually these patterns are mainly formed during session times. So like if we're looking at Euro USD, it's like a London slash USD pair. So there's an overlap. So there, it can happen really anytime. But price makes this over and over and over, like literally all day long. Like inverted head and shoulders happen all day long. Now let me show you, for example, what an inverted head and shoulders look like. Here, this whole area is an inverted head and shoulders. If you look, you have a V shape, left shoulder, right shoulder. This one's kind of slanted, and you can see these on any time frame. Right now, I'm just showing you the higher time frames, but the lower time frame is where you're going to get your entry. So let's say price gets to a major zone. Once price gets to a major zone, price is going to make this formation. So usually before you take the trade, price will make this shape, and then you take the trade. Do not take the trade as soon as it gets to the zone, because there's no confirmation for you to take the trade. The confirmation is the inverted head and shoulders. Here we have another inverted head and shoulders. Here we have another inverted head and shoulders. So you can literally see the head, there's a head, and there's a head. So you got a head, left shoulder, right shoulder, boom, price going all the way up. Let's see if we got some more. Right here, another inverted head and shoulders. Boom, boom. Let's see, another inverted head and shoulders. It's not going to always be perfect, but you have to be able to understand these V shapes. These V shapes. Drop some more ones in the chat if y'all can be able to identify that. And then I'm going to get in and marking up these charts for y'all. So this is just another confirmation. Let me know if you understand what I'm talking about. So this is a perfect confirmation for a buy. I take these trades all the time. That's how I'm able to be able to actually, you know what I'm saying, take the trade. That's how I'm always able to take the trade. All right, cool. Let's get into it now. All right, so first things first, before any trade, you got to have these zones marked up. So when you do your zones, always do them on a 1 hour. If you do them on a higher time frame, they're not going to be as perfect as you think. So a zone is basically just a major area where price is going to make some type of confirmation of a support or a resistance. These zones is pretty much an area where price is always respected at. It's just a major area. So about right here, this is a pretty decent zone. And then we can draw up some more zones. So in order for you to be able to know how to mark up a zone, you have to look for like multiple touches. It's like an area where price is well respected on the line. So like here, this is an area where price something kept happening here. We had like resistance, price broke through, support, price broke through, resistance. It's just a major area. It's like 3 or more touches. Everything you do is always 3 touches or more, even with a trend line. And I'm always on the 1 hour with this. So that's a good area. Here is a good area as well. And I'm also going to show y'all how to use the Fibonacci to catch these and trends as well, to catch price. So once you have most of your zones marked up, then you can start looking for, you know what I'm saying, major market pattern moves. And you don't need to make your zones big at all. They just need to be nice and evenly made. If you make them too big, you're gonna be like, all right, dang, it's stuck in this zone and it's a major resistance. I don't know when it's gonna break. So like my zones, I look for break and retests. And then maybe about right here. Actually, I'll put a key level right there. All right, so now if you know it's getting too crowded, just bring out your horizontal line. Bring out a horizontal line for you to be able to see where price is going to respect that. You don't need a bunch of zones, you know, you just need enough zones. And then maybe I could put one more about right here. So let's zoom in real quick. All right, so now that you have your zones, you can zoom in and then maybe you can see more. So once you zoom in, now you can see like some more major levels of where price is actually respecting it. Like right there, that's pretty solid. All right, so we got support, resistance, support, resistance. Boom. All right, it's pretty solid right here. And then once you get in between these zones, you can find other smaller supports. So these are like smaller, weaker supports. These ones are intermediate, they're just smaller.
Are you putting these all on Wix?
I'm putting a majority on the body and the wicks. So you kind of want to get them on the body and the wicks. Majority the body and the wicks. But when you're doing your horizontal lines, you want to make sure that they're on the actual like kind of the wicks. Is not going to be perfect, but you will know that that area is well respected. So like once you see something like, okay, it's hit here, it's hit here, it hit here, and it closed under. These are good levels. All right, so once you have your levels, now you can start looking for trends. So let's say, you know what I'm saying? Let's say price looks like this. Let's say price is in an uptrend. What you want to do is take your trend line out and draw. If you cannot draw it from like, I wouldn't draw it. Don't draw your trend line like this. Try to draw it where price is currently at. So let's say maybe around this area where you can get some solid touches. You just need it to be solid and current. So current, when I say current, I mean like where price is currently at. So let's say price is currently right here. And then you can like wiggle it up, you know what I'm saying, just a tad bit. It's not gonna always be perfect. So like this one got missed, but this one still fell through in the zone. All right, cool. So now that you have that, let's say for instance, price looks like this. what price would do is when price gets to a major level, let's say we got like a, there's a reason why price stopped right here. There's a reason why this double bottom was formed right here, and then the uptrend continued. So this was probably a major level of support right here. See if it'll let me go back that far. All right, so this is pretty solid. So you see like this level. So you always got to go back and look and see what's done on the left side for you to know what's going to happen on the right side. Because price repeats itself over and over and over. So this is like a major level of support. So this is why that double bottom came down here and stopped here. So what price is going to do is we're going to replay this out. Let's go back some more. All right, so this is how you catch the moves. All right, so once you have your zones and your levels marked up, what price is going to do is price is going to always come and find a major level of support. And these 1 hour time frames are well respected support levels. Hold on, y'all. I can't find my replay button. Oh, here it is. It's hiding from me. All right. So let's play this out real quick. So here, this is a valid confirmation for a double bottom. But at the same time, price is in the uptrend. So usually what you can do is whenever you see price look like a double bottom like this, you draw a trend line on it, literally straight down. Once you draw that trend line on it, I usually try to draw it from like the last high and then I'll move it over. So probably about like, so whenever I do, all right, so for double bottoms, I put my trend line on the body. It's the only time I ever do the body. So I do the top from the wick and then I'll rub it all the way across the body, like right here at the top of the neckline. Reason why I do that is because this is how you get the closest break, like what price is going to break through. If it doesn't break through, then it's probably more likely going to sell down. So let's see what it does. All right, cool. So price never broke through. So if price doesn't break through your trend line, there's no confirmation for you to take this trade at all. There's no confirmation. So this double bottom was invalid. So if you took the trade here, just be expecting a quick short trade if it doesn't break above your trend line. So like this trade right here, you know what I'm saying? It's about 20 pips if you took it down here, but you shouldn't take it at the bottom. You should always wait for price to break above and then make that next leg up. And I'm going to show y'all. All right, so now let's say price is at this major level of support right here. All right, so price is making that neckline. So there's no trade formed yet. Kind of an inverted head and shoulders right here. All right, cool. So let's say this right here, boom. There it is. All right, so that's our W. So let's replay this back one more time. All right, so let's say you see price like this. Now you have a confirmation for an inverted head and shoulders. Price came down, hit a major support level. You have a left shoulder. This is the confirmation for the buy signal. You have a left shoulder. You have a head. The head will always be lower than the left shoulder. If, you know what I'm saying, if this was lower than this point, then it's not an inverted head and shoulders. The head is always lower. Know your low points and your high points. This is the last high. This is the last low. So now, in order for you to catch this trade, you want to draw a zone. This is like your major zone level right here. So usually price made that left shoulder over here on my right side. So let's make this a different color. This is your buy entry. Price made this left shoulder right here. All you're doing is waiting for price to come back and retest that right shoulder like I showed y'all on that drawing. Once price get here, you're looking for confirmations for a buy. I usually put my buys like on the like pretty much on top of the zone, about right here. That's my entry point. My stop loss is going down here below the head. So if I did have a stop loss, this is only like 9 pips, and this is Euro USD. So Europe, these other Forex pairs, they move slower, so you can put bigger lots on them and make the same amount of money, you know what I'm saying, as you do on gold or a small lot or more. So you gotta wait for the price to set up. Even when you see price like this, you still wait. You always wait. Do not force your trade. If you force it, you'll lose it. It's all about being patient and being disciplined. Boom. This is your buy entry. Once you have that buy entry, you look for your major levels of TPs. Your first take profit is right here, 31 pips. Your second take profit is 102 pips. And your third take profit is about 137 pips. So let's say, you know what I'm saying, you like, well, what if it doesn't go that high? You can draw a little zone, a smaller zone at an area of resistance. So now you have another take profit. So you got TP1, TP2, 79 pips, TP3, TP4. You have 4 TPs because these are your major level of take profits, because this is a major area. This is a small area of resistance. So price touched here, price touched here. Wherever you see price reacting that, it's a level. So it's a level, it's a stopping point. It's a well-known stopping point. So now let's watch price play out. And then you also still have your trend line. You still have your trend line, that downtrend. So let's say you missed the trade. Let's say you missed this. If you miss it, you wait for price to break above and you catch another entry. So let's say you catch an entry here. You missed that trade. You still have the same amount of TPs. Let's go. You just have maybe a short amount of pips than the person who actually waited for the setup to happen down here. And even with that being said, you still caught a W. Price made 2 setups. Price made an inverted head and shoulders, and you can see the W. If you can't see the W, this is how you draw your W. Let's make this a different color. There you go. That's your W. Price is going to always do that. Once you see price break above your zone, you can look for some type of retest, and then price is going to buy up again. Because anytime resistance is broken, resistance turns to support. Anytime support is broken, it turns to resistance. So look, this was support right here. Support, support, support. Price broke out of support, came back, retested as resistance, came back down to support. So price will correlate back and forth, back and forth, back and forth, from support to resistance, support to resistance. The zone before that looked like it was about to form a W. Yeah, so I think you probably missed it. So so what we said was, if price doesn't break above, price didn't break above for that leg up. So here we had an early confirmation for a head and shoulders. We had an early confirmation for a head and shoulders. It made a slight W right here. If you go down to a smaller time frame, you probably can see this W a little bit better. But I'm just focusing on the 5 minute and the 1 hour to catch like full moves. So if the like, let's say like this, price had to pretty much break through for this to be a W. Price didn't close above. Price has to close above your trend line. That's the reason why this W is invalid. So we're not taking a trade unless it breaks above. The only reason why we took a trade here, is because we had the inverted head and shoulders early confirmation, and then this was the W. It's still correlated as a W. Patience, exactly, patience. Price came back and retested. Look, made another W, boom. Price made a W right here. So when you do, let's say you see this happen again. This is a confirmation for a W. You'll take your trend line, draw it from the last high across the body of the neckline. What price will usually do is it either come back and retest the trend line, or price will like come down and catch about midway of the neckline and then bounce back up. Let's see what it does. All right, boom. So your take profit was hit. So this is Euro USD. So you had the entry. Now let's say, for instance, this happens. This is why you trust your trades. So your entry was down here. Your original entry was down here. This is the bottom of the bottom, where you can't get stomped out. You can't lose anything. It's a risk-free trade. That's why you have to be on it and be ready for the setup. For my person that got in here, they only caught about, you know what I'm saying, before it came back to break even, about 49 pips on Euro, 49 pips. So price pretty much came back to break even about right here. So if I was to stick a little line for somebody that caught a second entry, you know what I'm saying, you didn't lose anything. You still was in profit. Price never broke through. You had a stop loss. That's the reason why you put a stop loss there, because if price was a break below, let's say this was your entry, your stop loss should be down here at this last low of this candle right here. At this candle, this should be your confirmation of a stop loss. That's only 16 pips. And then your take profits are still valid. You're still catching a 79 pip trade. Come on now, drop some ones in the chat if y'all ready for this. Let's go. So your whole trade right here ran you about, you know what I'm saying, all the way to your TPs, 102 pips. That's the type of trades we look for. Let's look at some more setups, y'all. All right, so let's say price is in the uptrend. Let's say price is at a resistance. All TPs are pretty much smashed right here. Just from this W right here, all TPs were smashed. Look at that. Look at that. All right, boom. So second type of entry. Let's say price is in an uptrend. Draw another trend line. Last low, all the way up. All right, so there's two ways you can take this trade. All right, so when price let's say price came all the way up here and you're looking for a trade. Price is retesting the support. This was a major level of resistance over here. This was a major level of resistance. You had support, price broke through. Price broke through, now it's support. What price did was price formed another W. So let's say whenever price breaks above, let's say price looks just like this. Price has to, anytime price breaks a resistance, it has to come back and retest. So what I mean like a retest is like this. Let me draw this up real quick before I go into break and retest. So now you know what W's look like and inverted head and shoulders. Let's look at break and retest. So break and retest. So let's say this is a zone. What price has to do
that W on the other one right up top there.
You talking about the one I just, yeah, I'm about to show you. I'm about to show you exactly. So on the break and retest, this is how you can be able to spot a W or just a break and retest. So let's say this is a major zone. Price is going to do one thing. It's going to come here, respect the zone. It can either come back down, you know what I'm saying, make some type of market structure pattern. It can make an M. Then price come back down to another zone. So price is now bouncing from zone to zone. Equal highs, equal lows. This is like consolidation. Price will literally just do this. Go up, come back down. All right, so let's say price has to go one or two ways. When you have equal highs and equal lows like this, prices just fluctuate in between your zones. Price either has to break above or it has to break below. So what you look for is if price comes up here, breaks above, if you have time to take the entry, you always wait for the 5-minute time frame to take your entry. So let's say price breakthrough. You can catch the trade here, but if you catch the trade here, just be looking for price to hit some other resistance and then come back down to retest. Once the retest happen, this is where you'll get a confirmation for another W or another inverted head and shoulders. Once you see that another W or inverted head and shoulders, price is going to bounce all the way back up. So your entry is on the retest or your entry is on the break. You have two possible entries. You have to wait for the confirmation. You have to wait for these highs. All these highs have to be broken. Once the highs are broken, you're looking for a price to go back up, retest, and then make a continuation of a trend. So now let's watch it. Let's look at it on the chart. All right, so let's look at this. So let's probably play it back just a little bit, and we're gonna see if we can go to a lower time frame. All right, so let's say price is coming up here to this zone. We're gonna scale our time frame down to the 5-minute. I go to the 5-minute to catch all my entries. And if we come back down here to this area where we see that W format, this is what it looks like on the 5-minute. This is how you catch the bottom of the bottom trade. This is the 1-hour entry right here. But look, inverted head and shoulders. None of these, both of these levels right here, they're not, you know what I'm saying? They're not literally passing his head. The head is right here. Tell me if you see any of these are lower than this point. If that shoulder is not lower than this point, then you have a confirmation for a inverted head and shoulders. Now look, this is where you take this trade at, right here, on the right shoulder. You take that trade here, come on now. You already, come on now, we gotta talk numbers. We about to talk real pips, real pip catchers. Your entry is literally down here. And let's go back to the 1 hour. Look at that. You caught the head on the 5-minute time frame. You caught the head on the 5-minute time frame. All you had to do was just sit back and let your trade ride out. Patience. That's all you had to do. Your money is working for you. You're not working for your money no more. You're not putting in any labor. You're putting in, you're marking up the charts, you're looking for the setup, and then you're executing the trade. So now let's go back to here. Let's go back to our break and retest. I just had to show y'all that. That's why I say every major zone has to make some type of market pattern structure. Do not take the trade if you don't see the market pattern structure. All right, let's go back to the 5-minute. All right, boom. So let's say price made it to the resistance. So now we're not looking to take a double top trade here. You know what I'm saying? We're not looking for it because price is already in the current uptrend, you know? And then we had a W form right here on the 5-minute. This was another confirmation for a re-entry. You had a retest, price bought up, came down, made another W. This was another double bottom. You know what I'm saying? You could have took this trade 8. Another W. This is a W as well. Price will always make equal lows. So if you're good enough, you know what I'm saying, to spot these trades, you can catch the equal lows. Equal lows. So it's like price will buy up and come back and retest the same level. If it's on a support, it'll come back and retest the same level every time. All right, here. All right, this is the 5-minute. Now, when you at this situation, when you're at a situation like this where price is literally sitting at this zone, you got to be ready to go ahead and take this trade at some point in time. You don't want to take the trade too early. Now, if you get in, if you're guessing and you try to get in down here, you know what I'm saying? It's two ways. It's a 50-50 risk because price is more likely can either make a double top and sell all the way back down on you because you have a neckline and you have a left shoulder, and this could be the right shoulder, but price pushed up. So let's watch and see what it do. All right, so when you're on the 5 minute, this is how you can see it at detail. When you're on a 1 hour time frame, you can flip back and forth between your 5 minute and 1 hour. But when you're on a 5 minute time frame, you have to wait for these candles to close above. So what happened here? It was a fake out. This candle did not close above. Let's rewind. Let's take a step back real quick. Let's take a step back, one step back. This is how price plays out. So you should not be trying to buy the trade here because you're going to get shorted out. If you do, just make this, you know what I'm saying? Just understand your risk to reward and understand that you either going to hold the trade or you're going to fold. Because if you get out, as soon as you get out, price already about to go up. So let's say price broke above. Once this candle closes above your zone, go ahead and be looking for a bearish candle to happen. So that means that sometimes you will see a bearish candle and then price did come and grab this imbalance right here, this order block. So this small piercing candle, some people call it a doji, some people call it a piercing. I call it a piercing candle. It's a body, it's a candle with wicks on both ends and a small body. So this is where you're entering the trade. You're entering the trade somewhere around here, and then your take profit is up here at the next level. You got more levels. You know what I'm saying? These are all your levels are your take profits. Remember that. This is why we do levels, y'all. These are your major stopping points. All right, boom. Once this happens, there's going to be some type of breakout and then a retest. So let's watch this. All right, so price breaking out. There it is. You're in profit. You're making money. Just be expecting price to come back and retest this level. So your stop loss, there's the W right there. There's the W. There's a double bottom. Your stop loss should be about down here at this last low. That's about 13 pips. The reason why we took this trade is because this candle closed above. It closed here, it opened here, came back down, made a bearish candle. It probably took retail traders out who got scared to see a little bit of red. They was guessing the trade, and then boom, price goes in your favor. Now, once prices like at this high, price has to find some type of resistance. So now you can go back to a higher time frame. This is what it looks like on a higher time frame. If you're on a higher time frame, you're not able to execute this trade. You're not able to see when the candle closes above. If you do on a 1 hour, your entry is going to be all the way up here. That's your entry. If somebody told you to take trades on a 1 hour, that's not how you take trades. They're telling you how to be a swing trader. That's how much drawdown you have. You're taking the trade right here, and then you're going to be in drawdown. Watch. You're going to be in drawdown. You're in drawdown right now because you took it on a 1 hour time frame. But if you caught it on the break, your entry is there. You're still at break even. So understand that price has to retest because this was resistance right here. That's where price came back down, made a doji candle, piercing candle, created supply and demand, and boom, engulfing candle came up. Take notes. So once price breaks a resistance, it has to retest it as support. I'm gonna keep saying this till y'all understand it. Boom. Price retested, played around. If we go back to our 5 minute, what do we see? We see multiple touches. We see about 1, 2, 3, 4, 5. If you got all these touches at break even, just understand that this is a strong support and you should not be worried about whether if price is going to go up or not. It's best to wait for price to get near the zones and look for setups instead of levels. So pretty much like when it gets to a level, you're just waiting for price to pretty much break the level, and you're either going to take the entry on the break if price closes above, and then usually price is going to make a setup. So either way, if you miss the break, just wait for the retest, and price is going to make some type of confirmation. It's going to make some type of entry for you. It's going to make some type of entry. It's going to be either inverted head and shoulders, or it's going to be, you know what I'm saying, a W. But you already smashed TP1. You smashed TP1 with no problem. You know what I'm saying? You smashed TP1, 20 pips. And then what happened? Price came back down, retested again. All right, boom. So here, you know what I'm saying? You already done flipped your account. You already out of the trade. You know why you're out of the trade? It's because it already hit your TP1. I mean, your TP2. There's no need to be greedy. That's 49 pips. And this is Euro USD. Just imagine if we was looking at gold right now. So it's good to take a higher lot on the retest for sure. On a retest, you can take a higher lot for sure. You know what I'm saying? You can, if you go in on a break, sometimes price will keep going up, but more than likely price stopped right here for a reason. So let's see why price stopped right here. And let's go back one more time. Let's look at this one more time. So price stopped right here because of why? What's done on the left is always what's done on the right. Boom. You had support. You had 1, 2, 3 touches. You had about 3 touches sitting right there. So sometimes, like, if you do trailing stop loss, you're just gonna, you know what I'm saying? You still gonna secure, because it's all about making profit. It's not about being the best trader. You just want to make sure that you secure profit along the way to the top. You know, because sometimes by trying to be the best trader, you're gonna lose money. You know what I'm saying? Because you're not applying the risk management. You know, so just always understand that whenever you're trying to do trailing stop losses. I only use trailing stop loss whenever I'm like 40, 50 pips in the trade. I'm already deep in profit. That's when I pull out my trailing stop loss. Or
Can you
like,
kind of explain trailing stop loss?
so trailing stop loss, let's say you're in profit. Let's say you're in profit. So this is your current stop loss. So once you're like deep in profit, let's say you're in profit right here. You're about 31 pips in. You can break even at 15 pips or half. So that means you can move this stop loss, you know what I'm saying, all the way in profit. You can move it about right there. So that means if price was to come back, all right, let's say your stop loss is like right here. For instance, let's say it's like right there. You know what I'm saying? Your entry is down here. This is your stop loss. This is why you try to stop loss. Price came back down and it knocked you out the trade. You was already in profit up here, but you stopped it here. That's the downfall about trailing stop loss. But price did hit your TP. So like I said, I'll wait till if I use trailing stop loss, which I hardly ever do, I'm gonna be real, I never use trailing stop loss. Only time I use trailing stop loss is if I know if I'm about to go to sleep and I can't look at my trade no longer. I can't look at my trade because I know I'm about to knock out. My eyes are heavy. Like I gotta do something. Because if not, I'm gonna have an open trade. I done had multiple times where I go and profit about $2,000 and then price will come all the way back to like 600. That's because I didn't use a trailing stop loss. That's because I fell asleep too. But you know what I'm saying? I always make sure that I look for price, look at price before I go to sleep and then adjust my trailing stop loss. All right, so
that's like moving your stop loss into profit when you tell us like during the day on trades.
exactly. So it's like move your SL in profit. So if I ever be like move your SL in profit, that's because I'm like, well, price may come back on us. You know, price may come back on us. So let's say like right here, so sometimes these levels are not always accurate TPs. So you still want to kind of use your zones. So like if you know you got a trade, this is your take profit. Come over here to the left side and draw another little zone on these wicks. Look at these wicks right here. All you had to do is just draw this zone. Boom. You'll take profit right there on the opening of the zone. Because these wicks all closed right here. They close here, close here, close here, close here. Look, close here, close here, close here. So that's why price reacted. This was the intermediate resistance that caused price to come back down. Remember I showed y'all in a little markup down below. There's going to be an intermediate to make price come back down, retest that level, and then shoot up to the moon. So pretty much price has to do this. Price always has to do this. Hold on. Price moves just like this. Price literally has to do this. And that's how price goes up. Price never shoots up straight. There's always a correction. So here's your correction. Correction. All these are all dips. Every time there's a dip, price is going to shoot back up and create a new high. And that's how you get more profit. And then you got a trend line on it. This is where I'm about to get into trend lines. When you have a trend line, what happens every time price touches the trend line? It does this. Buy up. Buy up. And then what happens when price is overly exhausted? When I say exhausted, price will hit a major resistance. Boom. Double top. Or a head and shoulders. And then you have this. Price will come out, 5-minute retest. And then boom, you just flip your account, you're done for the day. I'm about to show y'all that. I'm about to show y'all this same setup, y'all. These are multiple setups of how the market moves. This is what I look for every day. Oh, so closing half is basically like price usually retests on every price retests on every time frame. So like even I look at the women, I look at the 5-minute because the retest happens faster. So when price always has to close under a level or above a zone for it to be a confirmation to move to the upside or to the downside. And then to answer your question about closing half, it just means like you're pretty much just closing early with a trailing stop loss. Or actually you can say partials. Closing half is another confirmation of saying like, okay, partials or something like that. All right, so let's go back. All right, so now we understand break and retest. You can trade literally within zones. So look, if you knew there was a resistance right here, let's say you missed this entry down here, you have another entry to take. Another entry right here. Price is at a resistance. If you didn't catch this, you got the breakout right here. This is where price is going to break these highs. I drew this zone because of this right here on the right side. Support, support. Price broke through, came back. Price will always come back and retest it as resistance. It'll sell back down and break through. Once it break through, that's your confirmation. Now you go back down to the 5-minute. This is where you get your entry at again. You always do your analysis on higher time frames and then go to your lower time frames to get your entry every single time. All right, boom, right there. So once this candle closes above, what I tell y'all usually happen next. Somebody put it in the chat. Let me know if you was listening. Somebody let me know what happened next. Retest, but what type of candle? What type of candle comes after the breakout? It starts with a B. Bearish. Here's your bullish candle. Then you have a bearish candle. That bearish candle is a confirmation to let you know price is about to retest. Once price retests, go ahead and take the risk. Put your risk management in. Stop loss could be down here at this last low of this candle. 8 pip stop loss. And then watch this. Oh, stop loss got hit. Oh, we got obliterated. All right, so that happens. All right, so let's say trade going wrong. Trade going wrong. Trade going wrong. That's cool. That's cool. If that happens, come back at it. Come back and get it again. What we got right here, we got inverted head and shoulders. We lost one trade.
Can you draw a line on that inverted head and shoulders?
You could draw a line. So like here, I'm taking the entry like right here. So I'm usually putting my little line right here. I'm coming back. I'm getting this trade back. I'm getting it in. My risk to reward.
No, the line for the head and shoulders, like draw the pattern.
Oh, you said draw the pattern? Okay, I got you. This is something I do as well. If I can't be able to identify it, I draw these lines. There's nothing wrong with doing this. I swear there's nothing wrong with doing this. That's the only way you're going to be able to see the market.
Yeah, yeah.
Boom, we got confirmation. This is for my people that caught a late entry. You know, late entry. This is sometimes when you come to the party late, like this happens. But when you come to the party early, you know what I'm saying, you good right here. You still at break even no matter what. So that means you hold your trade and you wait for your analysis to be hit. This was a better retest. This was another retest. So price fully closed above right here on this candle. Price hit another key level, came down, retest. This could have been another entry. And then you're riding your trade out. Now price is going to go back up to where it needs to go. And it's a psychology thing too, man. It's all about trusting your trade. It's all about trusting your trade. All right, so, and it kind of formed a W. You still can see the W. Look, there's a W. So that inverted head and shoulders low-key was a confirmation for the W. Like you took the trade here and then price went all the way up. Look at how many pips this is. That's 45 pip move. All right, so now let's look at this. Here's another possible entry. Let me delete this. All right, so once you have a trend, you got your trend line out. Let's say you see price in the uptrend. This is another way to catch moves. And when you draw your trends, please make sure that they're on the wicks. They have to be on the wicks for you to get a valid break of structure or a valid test. So when you're looking at trend lines, These are confirmation for buys if price stays above your trend, if it closes above your trend. And we can see on the 1 hour, this was probably a cleaner head and shoulders right here. I'm not even gonna lie. This is why I look at the 1 hour, y'all. This was even cleaner right here. This was super clean on the 1 hour. The 1 hour will always tell you the full move. This is your entry. There's no drawdown at all right here. Like literally no drawdown. Look at this. 80 some pips, 80 pips on Euro USD, 83 pips. And I'm telling you, like, if you could catch 80 pips on Euro USD, you could catch 200 pips on gold. All right, so let's say this happens. Price breaks through your trend, broke these lows, or it broke outside of the trend line. Once price breaks outside of the trend line, you can look for a retest and then a sell. So let's see what it does. All right, so this one wasn't a solid break. The reason why it wasn't a solid break is because price was on a major level of support. So if you got a zone and you got a trend line, 9 times out of 10, you got to still respect these zones. Always respect these zones. So now we got about, let's wait for 3 touches. So when I draw my trend line, I usually wait for three major touches for it to be confirmed the trend line. All right, here we go, right here. And you'll have to do this whenever you have a trend line. Price broke out multiple times, but we're not looking for any entries yet because we don't have 3 solid touches. We got about 1 touch. We have 2. Move that trend line over some more. Actually, hold on, y'all. I think this is not right. This is not my trend line. My trend line over here. So back to my zone. So the reason why we have these zones is because we're able to trade price within these zones. If price is in an uptrend, we're literally trading from here to here to here, then to here. Price just moves within zones every single time. Up here, we probably had like an invert. We had a head and shoulders up here. A slight head and shoulders. If we go to a lower time frame, on a 5-minute, we can see the head and shoulders. Right here. So now, for a head and shoulders looks like this. This is a confirmation for a sell. Usually what price does is it come up, come down, go back up, make the high. It looks like a mountain. Come back down. And then what price will do is it'll come back and make the same level. This is your entry right here. And then you catching all that. So I'm not gonna spend too much time on Euro USD. Y'all know this is not my favorite pair. Gotta get prepared for that funding talent since they took away gold. These back tests is helping me. Uh-oh. All right, so if we look closely right here, on a 5-minute time frame, it came to this major zone, and then we had a major inverted head and shoulders. This is your entry. This is your setup. This is your confirmation. Left shoulder, head, right shoulder. If we play it back, price will look just like this. And this is where you're anticipating the sell. Once you have that, you can go ahead and put your risk to reward in. Stop loss right above here, about 11 pips above the last high. I don't usually put it on the high, I put it above it. And then my take profit is at my next zone, 67 pips. If I see another zone in between, I'll look for smaller zones. So maybe about, I can say about right here, this is my TP1. Price come back, grab that entry, you're in the sale. You're waiting for the confirmation. You're waiting for that right shoulder to form. Anytime you see that spike head and that left shoulder, always know a right shoulder is going to be formed. TP1 smash, TP1 hit for about 29 pips, 30 pips. So when I say that, if you're using a standard lot size, that's $300 right there. Then down here, that's $680 if you're using a standard. And just to let y'all know, whenever price hits an actual zone, like when it hits your first zone, go ahead and like move your stop loss, you know what I'm saying, above. Just move your stop loss and profit. Take some partials or close in full. Boom, take profit, smash. So you had to wait until that zone got hit. Once you waited, you already accumulated 68 profits, 68 pips just from this confirmation alone on the 5-minute time frame. On the 1 hour, it looked like this. That's why you go to the lower time frame and you find out the trade. All right, let's go back. All right, so currently, let's look at currently real quick. How good are other pairs with W's? Honestly, gold performs the best, in my opinion, with W's and M's and head and shoulders. Honestly, I say GU does pretty good. This is EU. So you kind of want to back test, you know what I'm saying? You want to at least back test to see like what pairs are going to give you what. I always try to at least go back and back test everything I do. You know what I'm saying? Like, especially if I'm trading a new pair, I like to go back and see what it can do. You know, I love to see what it can do. All right, so let's say we use a Fibonacci. Let's talk about the Fibonacci real quick. The Fibonacci retracement. So when you're using the Fibonacci, it's all about knowing higher lows and higher highs. So here, when I use my fib, I always draw my fib from the last low to the last high. So let's say we see price in the downtrend. What I usually do is I draw my Fibonacci from the last high to the last low. My zones, if you don't have this Fibonacci, let me know. I'll show you these coordinates. So this is another type of entry trading style you can do.
Please do.
All right, I got you. Let me show you real quick before I get into it. All right, if y'all want to use this fib, I'm telling you, these fibs are golden, like literally. Like, you know what I'm saying? This is how you catch trends, up, down trends, pullbacks, all that, like wick entries. So if you got to take a picture of it, type in the chat done or put a 1 whenever you got it. Nah, so much sauce for real. I'm trying to put it all in one call so y'all can go back and rewatch it. You know. All right, as long as everybody got it, whoever else needs to
This is
go
on the
ahead.
left side, right? With all your trend lines.
Yeah, I use so I use values, I use right and I use middle. And then I don't use a background and I don't use reverse.
I'm saying, where do you actually access it at? Is it over on the left?
Oh yeah. So right here, it'll be under under pretty much where your trend lines is, should be right up under, and then you'll see Fibonacci retracement. All right, so let's get into how you can catch moves in uptrends and downtrends on a 1 hour time frame. So when this usually happens, price has to make higher highs and higher lows. So let's say price is going in the downtrend. Price to do this. So what this is a downtrend. This is where price is actually making confirmation to go down. And then, you know what I'm saying, you got your trend line, you already know it's going down. And you can see a bearish channel. Sometimes if you ever see a channel like this, that lets you know that's a downtrend. And then you have over here an uptrend. This is how price always moves. Understand uptrends and downtrends in the market. This is what an uptrend and downtrend is. And then in the middle, what price to do is price to consolidate. So this is what we call consolidation. We got an equal level of resistance and an equal level of support. Y'all see that? So you got W's right here. This was the lift off for price to go into uptrends, not perfect. And then you have the downtrend. So when you have a downtrend, you can catch moves by using the Fibonacci by drawing it from the last highest point to the last lowest point. Usually what price will do is it'll come back retracing your golden zones and then keep dropping. And then you can keep moving your fib. You know what I'm saying? You can keep moving your fib. You can take the fib, you can draw the fib in the uptrend. So if you're going in a downtrend, you're drawing your fib from the last high to the last low. And then you're catching a retracement at the golden zones. These are your golden zones. So I usually draw it from the body. I'm gonna show y'all this on the chart. From the last high to the last low. Y'all put this in your notes, y'all. Golden zones. These are your entries. You're catching entries like that. Let's say you're catching an uptrend. You draw it from the last low to the last high, and then you're catching the pullback. You're catching this move right here. You got your golden zones. Boom. Catching the move all the way back up. Drop some ones in the chat if you know what I'm talking about real quick. I'm about to show y'all how we do this. This will be the last thing I go over.
Not really sure.
All right, we're about to get you right. All right, so a higher high and a higher low. A higher high is when price is going up and it comes down.
That
This
part
is
I understand. It's just the Fibonacci that you were putting on there. I'm trying to understand what that.
okay. So when you're using the Fibonacci, you got to understand when price is going up and going down. So we start with the higher highs and the higher lows. So for instance, this is the last major low. This will be the major high. So let's actually see how many moves we can catch in this uptrend from using the Fibonacci. So let's say we have this type of trend right here. Price is at the bottom. What you want to do is you're going to draw your fib from this last low point. We draw it from the body, not on the wicks. We draw it from the body. So this is the last low for the uptrend to start. And then you never have to adjust. Let me actually make this bigger for y'all. So this is the last lowest point right here. Right, the last low. This is where your one is always going to be. So
on
now,
the body, not the.
your body always. It'll go from body to body. So let's say this right here. We only adjust this right here. So we're not going to adjust the bottom portion. We're going to adjust the top portion. So currently, I can move it right there. So this is what I'm going to do. Let's play it out and see what it does. I'm waiting for price to come back down and retrace. That was pretty fast, y'all. Let's go back. Let's go back real quick. All right, so that's pretty much the last high where it's at. We're going to do it at a slower pace. My golden zones, once you see price start being bearish, like once you start seeing the bearish candle, price is going to retrace. All right, right there. There's confirmation. That's like book a bearish engulfing. It's starting to make a bearish engulfing. You have the piercing candle, which is a confirmation to let us know that the bullish piercing candle, confirmation to let us know price is about to go back down. So I draw it from right there. That's the last highest point. That's the last lowest point. My golden zones are usually the 0.50, the 0.618, and the 0.74. So I used to try to get my entries right here, but the reason why I don't get my entries here is because sometimes price will come and get that last resort zone. So I'll take this zone and move it right here in between these lines. Once price gets here, I'm looking for a buy. I'm looking for a buy push up. And I usually put my buy right there on top of that line of the golden zone, and it tells you the number, 1.176640. That's price. And then my stop loss is right here. Or I can put it about right here. Let's be lenient. 9 pips. So that's the last lowest point. My take profits are the 0.236, the point negative 21, and the point negative 0.618. So usually I don't really care about these take profits. I trade my charts from zone to zone. So if I got a zone here, I'm trading all the way up to my next zone. That's 57 pips. Now let's watch price play out. Once price starts to retrace, you're catching a buy entry, wick entry right here off the Fibonacci. Straight profit, TP1 smashed. Right there at that zone, at that last closing point. That's 50 pips. That's 50 pips, 52 pips. It don't get no better than that. You can't, I'm telling you, this 0.716 on straight sniper entry. I'm talking about straight blue screen. That's all because I drew my fib from the last lowest point to the last highest point. So now let's do it again. Let's see another setup. Let's say you missed that one. Let's say you missed that trade. Let's see what else we got. All right, so that trade hit. All right, cool. So let's say we got this last low, this last high. We could draw a fib from here to here. Last low to last high. And then boom, my buy entry right here. My stop loss down here, about 25 pips. My take profit up here to the next zone, 64 pips.
So you do this from the lowest low to the lowest high, or the last lowest low?
So when you're doing a buy, it's last low to the last high. When you're doing a sell, last high to the last low. It's just vice versa. All right, so this was probably like some news, but regardless, we still already in profit. You didn't even see this. I'm telling you, you probably didn't even see this. But the reason why your stop loss is down here is because this is the last major low. So you put your stop loss under the low. That's only 25 pips. You making 64 pips. Come on now. So the major golden zones between 7.18. So the 0.71 and the 0.764. Those are your major golden zones. This green zone right here. So your entry was right here. You only seen about 22 pips drawdown, barely. Shoot, really on the first one, you already up. You know what I'm saying? You already up. And then boom, you in profit. That's how you catch trends. All I did,
on all pairs.
You can do this on any pair. It doesn't matter what pair it is. And honestly, gold, like on a gold fib retracement, that's 200 pips. That would have been 200 pips on gold. All right, so let's say we got a downtrend. Let's speed it up real quick. I'm gonna show you the downtrend real quick, guys. All right, boom. Here's our downtrend. Last high, last low. Draw the fib from the last high to the last low, which is right here. I'm gonna zoom in real quick. That's my last lowest point right here. That's my last highest point. My sell zone is right here. This is where I'm looking for a short period. This is where I take my short trades. My stop loss, y'all already know my stop loss set above the last high. Now I'm just waiting for price. Once you see price retracing, you know what I'm saying? You never have to adjust this one unless price goes back above it. That's the only time you readjust it. But once you see that sell happen, that big long downtrend, price is about to pull back and keep making those lows on the way back down. My take profit right here. That's TP1, 26 pips. And then boom. TP2, 67 pips. I'm gonna move this about right there. And let's watch it. Boom. Your sell zone right there. That's where you're taking the sell at every time. Every time. TP1 already hit. Came back for a retest, made double top. Retest it again. This is where price is currently at now. Like, yo, you already done scaled your account easily 30 pips to the next zone. You got to respect those zones. Don't get greedy. Take your partials, move your SL and profit, secure the trade. You know? But price never hit stop loss, y'all. Just think about that. If you was trying to hold this trade down here and you just sat in it and waited, you was patient because you was just confident on TP2. You made it. You had 63 pips. Look at what drawdown you had. You had 4 pip drawdown. Come on now. Yeah, it was a little long trade because it's Euro USD. It moves slower.
That would be like the whole day, right?
The whole day on this trade, but still, you still profited. You know what I'm saying? 2 standards. Come on now, that's bad. That's more than like 2. That's almost 1,600. You know, really like about $1,200. for the whole day. People go to work for that, to see that, you know what I'm saying? You just sit back chilling. That's the psychology, the mindset you gotta have. And then if you just looking for some quick money, quick pips and dip, and then wait for the next setup, $300, 2 standards, you know what I'm saying, $600. Let's go. And this is where price is currently at right now. So I don't see any setups right now. Yeah, Fibonacci. I don't see no setups yet on Euro though. That's Euro for you. Back to GU. GU about to hit TP2, man. GU coming down to TP2. 75 pips for the whole day. This is the only reason why I stay away from these pairs, because you be sending these trades for a little minute, but you gonna make the money, man. Eating. You still in GU, you eating. I'm telling you, you could have caught GU again. We could have went back in for another re-entry once price broke out. Because remember what I told y'all before earlier? What happens when price breaks a zone? It has to come back and what? Retest it. Price came back. Price made a double top right here. That was already a confirmation for a sale. Because price was already in a downtrend. Because reason why price is in a downtrend, because this major trend, this uptrend was broken. So now price has to find some correlation. It came up here. We had a wick entry on this trade, y'all. Look at the drawdown that we had. We had only 8 pip drawdown for a 75 pip reward. You can't get no better than that. You can't get no better than that. How do you know where to set partials so the trade can keep going? You set them at every TP, every take profit. Like right here, this is your first partials, 44 pips. You should at least took half of your profit. You should have took half of your profit and then waited for the next half. You still going to accumulate 75 pips. You're just securing money early. And then your trade is risk-free because you already made profit on the drop. Like this was news. We caught all this morning. This morning was great. If you took signals this morning, you made a bag. I know a couple people already halfway done with their funding talent just off of today's signals. You know, it doesn't take that many trades, literally. One good day and you're good. Just imagine when you start putting those big lot sizes, those $100 pip trades. You're making literally 10 bands, 15 bands every single day. Like that's the goal. That's the goal, I'm telling you. Legal bank robberies. Let's go, man. I'm about to wrap up this call. If y'all got any questions, just let me know. I know this call probably over like an hour. We started at what? We started at 9 o'clock. So we've been on here for about an hour and a half. So y'all got some good education today. Good education, man. Y'all go drop some fire emojis in the chat for me real quick. I need everybody on the call to go put some fire emojis in the group chat.
Appreciate it, bro.
Not in here. Put them in the pip catcher chat. Go expand the chat real quick, because you know what I'm saying, the others gotta wake up because they just missed these gems. But they'll be able to see it on the call, but they're not gonna be able to see it like live, you know. So y'all do that for me. That's the only thing I ask. Y'all go expand the chats. You know what I'm saying? I hear it dinging right now. Let's go, man. I'm ready, man. Let's turn to 6 figures, man. Let's go make 6 figures. Put your game faces on. Put everything on. Let's run up these numbers, man. I appreciate everybody. Let's go.